What's up, legends? Bitcoin is just breaking the 800 EMA right now, so I wanted to jump on and video this as it's happening so we can talk through what is actually going on. Now, following on from yesterday's video, I filmed when price was around here and I spoke about two important levels to watch for a bounce. One was back at these candles here, and then if we broke that, it was going to be down here at these candles. Now we can see that what did happen yesterday after price made that move to the upside, it came back down here, and this right here was the retest of that level with a delicious hammer. So that hammer right there was your long signal because price held above the initial low of the day right here where this red wick created the initial low of the day for yesterday. Now, what's happening right now is a good sign because up until just literally now, price was failing to get back above the high of the day. So whilst you get the good entry signal, the next area that you want to see price break is the previous high of the day. So the last point that price went, the highest point that price went on the days prior. And you can see here that earlier today in the Asia session, we got stuck in that zone right here. And now we have just broken it. We're making a run for the 800 EMA. Now I've got my eyes on this level up here, which is this vector zone right here that was formed on the 9th of June. The reason for that is because there are two liquidation levels right below it. And so if price does continue up to around 26,380 to 26, let's say 450, somewhere around there, then it's going to take out those liquidations. These are people who are currently short that may have gone short throughout this drop. They may have gone short here, or they may have even gone short at the very, very bottom, and their liquidation level is up here. Price has not come any lower in order for them to take profit, and instead of cutting a bad trade, they're holding on to it in hopes that price will return to their entry point so they can get out at break even. So the more we keep pushing up into that level, the more at risk they are, and that's how they get liquidated, and that is how the market maker builds their own positions. Now we have to be very, very careful today because we have some news events coming up today and tomorrow. We've got CPI at 4:30 today. That's 4:30 Dubai time. So if you want these times in your own time zone, just go to forexfactory.com/calendar, click on this little time icon here, and then you can change it to your own time zone. But it's about 3.5 hours from the time of me filming this is CPI, and then tomorrow we have FOMC. So as we get closer now, there probably will be some games going on. It's best as we get into, at least a couple of hours before that you close any short-term day trades because price, it's going to get volatile and it could cause some issues. If you've got, good long-term investment type trades, that's a different story. But for day trading, you kind of want to stay clear of a couple of hours before an actual news event. So it's good news that we're breaking it, but we may wick back down below it and that won't be good. I'm literally filming this as it happens and the candle has not yet closed. So if we close back below it, that may be all that they wanted. Don't forget, there is this big vector candle here that is in need of being recovered. So the very top of that candle is at 26,340, and that may be all they want. So it's when you get to the top, when you return to the top of a vector candle, that's where you should be looking for rejections. So no guarantee we're going to go up to these liquidation levels. We've got to get through this vector candle first. If we do, then we're looking at these higher ones up here. But also keep an eye on candle. If a candle closes like that with a huge wick like that, you're waiting for price to pull away, then come back in the new session and create a lower high M formation for a reversal to the downside. So it hasn't closed yet, so I'm certainly not saying that's what's going to happen. But I'm just showing you if a candle closed like that, that's what you would wait for next. You don't short on that. You wait for the follow through with the lower high, then you would short. So we'll see how that one goes. Let's have a look at Ethereum because Ethereum's got a little bit more information for us right now. With Ethereum, So both of these are in trapping volume formations right now. Bitcoin just broke out of its one, but it hasn't closed yet. Ethereum, a trapping volume formation, traps traders on one side. So after a big move, so we had the big move to the downside here, it traps traders at the bottom here, as you can see in all of these wicks. And then price never returns to the initial wick to release them. So you can see we've had a lot of wicks in here, but we've not had any candle closes back in that wick zone right there. So those people who shorted way too late on the weekend, which there would be a lot of them, because look how many people committed to positions here when you look at the open interest, heaps, they're all stuck at this point in time. And then to the upside, they've also trapped traders in this zone here because we've got spike to the high, and at this point in time, we've not released those ones either. So what I'd be waiting for on ETH is to see if price does push into that zone and give us another, third attempt. Let me actually quickly have a look to see if there are any liquidation levels in this zone. And now when we have a look at what's going on in ETH, we've got a 3.7 billion delta to the short, so people are more bearish than bullish right now. It's almost 2/3 more bearish, you can see here, from short liquidations compared to long liquidations. And then above price currently we've got 1781 25x shorts. It would be the next closest. That's a super high one. And then down here on this one is 1760. That's the closest 50x shorts. So when I transfer that to the chart, you can see here, this is the 1760 right here that this hammer is going for literally right now. So the key is going to be to see, once it's hit it, which it just did, if price pulls away from it and continues to create higher lows, it may want to make its way back up to these ones, these highs up here. So now that ETH is currently moving away from this level, keep an eye on that, because have a look at this declining open interest right here as price was rising. When you have rising price, declining open interest, that's actually bearish, and this stop hunt might actually be the final move as well. But it may not be bearish enough to actually take a trade, because if you look where it is, where's your take profit going to be? It's back down at these levels at best, which what if it just comes back to create a higher low? Because at the end of the day, we're creating higher lows, right? So I'm not sure, like, even though the signals are there, I'm just not sure this is going to be a great setup anymore. If price actually came back to these zones, it would be a way better trade. And look, it may still do that, because if price was to come down here, create the higher low, then go for there, then give you another stop hunt, M formation down, that would be great. But there's not enough time for that to happen before the news event. It could be tomorrow's price action for all we know, but not for right now. So either way, even if there's not a trade, the price action is setting you up for something that's potentially bigger later on, because like I said, we've got declining open interest, so they're liquidating people right now. We've got rising price, we've got a range, we've got liquidation levels above price, we've got trap traders below price, and your safer bet for this is going to be to wait to see if it gets out of the range. Now, trapping volume formation should break to the upside, but in a bear market, I often see it create new lows to the downside, because at the end of the day, all it is the market maker is accumulating in this entire period right here. And that takes time. It usually does drag out, and it leads to a very boring week with not much trading. But when it breaks out, it's going to be good. So on that note, if you are looking for somewhere to trade on, as you guys know, OKX is my preferred exchange. There is a link in the description of this video to get up to $60,000 in sign-up bonuses if you complete certain tasks. So if you're looking for somewhere to trade, check out OKX. If you cannot use OKX because of where you are, we also have BitGet. It's a new partner to this channel, which I'm very excited about. They are available in fairly certain it's most countries, potentially with the use of a VPN, but they also have sign-up bonuses as well. So be sure to grab the link in the description of this video for one of those two. Not only do both of them give you 15% discount ongoing off your trading fees, but it's also just a nice way to support the free alpha on this channel. So here's the thing about these now. It's good that this is happening live and I can actually talk you through it. Now that that candle has closed there, you want to look for the follow through through, right? This is why you don't immediately short on a stop hunt candle, because you need to look that the next candle actually follows through on that new movement. So if this candle right now starts to move back up and it's into this wick, then it's releasing whoever potentially just got trapped, and those people are safe for now. So you can see that currently happening. Again, it's 1 minute of this candle and anything can change, but that's what you would wait for on the next candle after you see a stop hunt move like that. And that's why you don't automatically short just off that candle. So we'll see how that next candle closes. Let's have a look at what Bitcoin's doing. Is it doing the same thing? And Bitcoin currently it's not looking all that great. Look, it's right at the 800 EMA as well. So it's at the 800 EMA. It's at the high of the day. It's given us a stop hunt. It's also at the top of this vector candle right here. It is a good spot to look for reversals. However, then you've got to match it up with the timing of the news event. So let's see, you may get a second side at the news event to short, or it's just going to come back down, not give you a second side, hold the 50 or hold the 200 EMA, give you yet another higher low, because we've got 1, 2, maybe it's coming for a third, and then there's another rise up into this liquidation zone. So those are the two things that I would be watching for. Definitely going to be better to trade post-news than pre-news. Let's take a very quick look at the heat maps here. Here we go. I've got some shorts coming in. These haven't been here for a while, so this is interesting. This has only just come in now, and we have shorts here at 26,250 and also 26,400. So when we put that range on the chart, you can see that's going to take out this liquidation level at 26,383 if it does spike into there. There is another one at 26,443, but I like this zone. Like, I like this zone for potential rejection if we're going to head to the downside from here, because of here. You can see this green vector here is where price, it was the last attempt to push price up before we massively fell away. At some point we returned to those zones. So I do like around here where we are. The key is going to be, this is the battle zone. So can price break through it? Then we're good for more upside. Or is it going to give us a second side M to head back down and fail to get through those sell orders? Very key level. Keep an eye on this post and pre-news. This is going to be your hint of what to trade next. There, if you enjoyed this video, if you learned something new, be sure to smash that like button, hit subscribe, and also consider sharing these videos if you think more people should learn to understand the markets this way, because it's not just about trading, guys. It's not just about where do I draw my line, where do I look for a triangle. It's not about all of that stuff. It's about understanding the movement. It's about context, right? It's about what is happening in the moment as price is moving. Do you understand what is happening? Because you may see a green vector like this and think it's a green vector, that means we're going up. But at this point in time, that very same green vector is actually a trap that could be the final trap before sending it down. So understanding the markets is what makes you a successful trader, not just the ability to draw patterns. That is my lecture for the day. Have an amazing day. I'll see you on the next one.